Good morning, everyone. Richard Calhoun, Creekside Realty. We're here to discuss the real estate market in Silicon Valley. I'm not going to go over all these details. They stay the same. They're up here. You can come back. It's on the YouTube channel afterwards. We're going to get right into it. This is the heat map for the single family homes in the different micro market areas. The numbers over here are the median sold price. So basically the concept of this map is the redder the area, the higher the price. The bluer the area, the color, the lower the price. So Menlo Park, Atherton doesn't surprise anybody as being the highest. East San Jose and South San Jose being, or South County being the lowest doesn't surprise anybody. And the numbers are over on the side. Basically, the blue is the lowest. Median is no color, which is Redwood City area, and red is the highest. Moving on to magnitude of overbidding. It's the same concept. No color is at 100%. So sellers got exactly what they were asking. There'd be no color on the map. If they get 96.5% or less, it's saturated blue. 110% or more, it's saturated red. The concept is the same. So you can see in South County here, it's a light pink, a light red, and it's just over 100%. It's at 100.4%. Menlo Park, Atherton is pretty red. It's at 97.9. So that's how you go through all this. You can quickly see where the hot areas are. And this is based on how much the buyers are overbidding, not on how frequently, just on how much. This is based on the frequency of overbidding. So you can see that they're not 100% correlation. The big thing that stands out is you can see that South County is very red on frequency of overbidding, but was fairly pale red on the magnitude of overbidding. And they just don't have a history of overbidding. You can see the affordable areas, Santa Teresa, Blossom Valley, North Valley, Milpitas are pretty dark red. So is the Mountain View, Sunnyvale, Cupertino area, as well as Daly City and Foster City. So overall, the market's pretty hot, especially considering the time of the year. And this is the frequency. So in South County, 67% of the sellers are getting more than they're asking, 6 out of every 10, or almost 7 out of every 10. Now we're looking at days of unsold inventory, and this is the leading indicator. This is right now the rate of sales. The redder the color, the faster the marketplace. So at 24.5 days, you're saturated red. And look at this. South County is at 18.6 days. Milpitas, North Valley is at 15.3. Campbell's at 20.8. Finally, you get down to Cupertino, Sunnyvale at 24.8. And it's, almost saturated, but if you got real good eyeballs, you might be able to tell it's slightly different. I can't. But 25 days of unsold inventory is unbelievable. That is one of the fastest areas, along with Los Altos and Palo Alto. Clearly, Los Altos and Palo Alto at 45 is one of the slower marketplaces, which is why it's white. Basically, what you're seeing is people with the pandemic are wanting larger houses. They're moving further away from their job centers because they're not commuting in every day. And when they do commute in, the traffic is a little bit less. Now we're looking at each one of the different micro market areas, all 22 of them. And what this is it's only unsold inventory. So you can look at this and see what's going on. The red line is Santa Clara County, and I do that because it's the biggest. And basically you can see it's fairly flat. The vast majority of the micro market areas are fairly flat. There's one here that's gone up a little bit, but again, it's really fairly flat because it was over here. So basically we're going into the holidays with a flat DUI, and flat meaning unchanging, but also at very low levels. Here is a new map that I think I'm going to get rid of. This is only the second week I've used it. The blue line is the actual data, and it shows you the change from the previous week. So basically DUI, the blue line is the data, and you can basically see 2 weeks ago, we had a decrease, which would be an increasing marketplace, a faster marketplace, because it's going quicker. Now you can see we slow down, but you've already seen the numbers. This is what the gold line is, what the change for the given week typically is. And you can see there's a lot of a bounce. There isn't much change off the horizontal line. I think it's confusing more than helpful. The one thing that really does stand out with the shelter in place, basically there's a period of time when you wouldn't have expected much change, and there was radical changes. So that was just people were getting used to the new norm. but I'm pretty confident I'll get rid of that for next week. This now is looking at days of unsold inventory for the macro. So this is Santa Clara County, San Mateo County, single family homes, condos, and townhouses, everything that has happened in the last week. So it's a very short time frame to try to get a better handle on what's happening from week to week. The gold line is the 5-year median, and I compare week to week. So we're now in week 46. The blue line is the actual data, and the red line is the ratio. So basically right now you can see the blue line is a little bit below the gold standard, the 5-year median. So that is why the red line, a percentage, is less than 100%, so it's below. And with days of unsold inventory, the lower the number, the faster the marketplace is. So not only are we having a good marketplace, we're having a faster marketplace than we've had in the last 5 years, which would be 19, 18, 17, 16, and 15, which were all 5 good years. So we're having a better than a good year, which is pretty incredible when you think about it. But I think what's happening, as I said before, is the pandemic is causing people to need more square footage. So people are moving, and sellers that don't have to move are staying put. So that brings extra buyers into the marketplace without extra sellers. And that's what's causing the imbalance, in my opinion. The data shows that there's an imbalance. It doesn't tell you what's causing it. Now you're looking at the 3 major key components, which are the available inventory. My available inventory is inventory that is unsold, which is different than most people. By unsold inventory, there is no contract. So a offer that's been accepted, but the listing agent wants to show that property, that doesn't count as inventory because that first buyer is in there and that first buyer has control. A buyer can't come in and buy that property if they want to. So the blue line shows available inventory. If we were having a perfectly normal year, it'd be right on the red horizontal line. And you can see for the most part, even during the pandemic, we were right on the red line. We're now a little bit above. We have 20% more inventory than we typically do. So for people that say there's a lack of inventory, that's really not true. We have 20% more than we've had for the median for the last 5 years. But what's interesting is you move on to the number of new listings. The number of new listings, last week we had 80% more listings come on the marketplace than we should have. But what's that mean? The buyers are keeping up and eating it up. So right now, buyers have been basically buying 20% more homes than they normally do. So we're having 20% more volume in the real estate industry. And that's pretty incredible when you think about it. And then I've weighted out the closings because that's really just another line and confuses things, because closings are what new offers are delayed by about 5 or 6 weeks. And so it just muddies the water. By leaving it in white, I can bring it back if I ever want to, but I don't think I do. So the big takeaways are the gray line here is coming up. It's selling. We're selling. Buyers are buying about 20% more than the normal inventory. New inventory has been basically somewhere around 40% for the last several weeks. This last week, it went up to 80. Why did it go up to 80? Well, normally we're coming into Thanksgiving, so normally people wouldn't be coming on the marketplace. But with the pandemic, holidays aren't what they normally are, and so the slowdown isn't as dramatic as you normally would expect it to be. So here you're starting to see exactly that. The blue line again is the data. So this is the current inventory, unsold available inventory. You can see it's rolling down a little bit, but it's not dropping down as much as it normally is. So because it's not dropping down as normally as it is, or it's at least been delayed by several weeks, and we're already at Thanksgiving, that's why we're coming up here. So you basically are having, it's almost like holidays got wiped out this year. Maybe that's the way to look at it. Because remember, holidays normally negatively impact real estate. And with the shelter in place requirements, we're essentially not having holidays. Now we're looking at the number of new listings in any given week. Again, the blue line is the real data. So you can see we are falling down. We're here, but normally we're way down here. And that's what caused this red line to shoot way up. So, to put it in numbers, typically this year you only have 150 new listings. This week we had something like 380 new listings, and that's why the percentage is off the top of the scale. So you have to look at raw numbers or magnitude as well as percentage, because if you have a small number as your base, like a number somewhere around 150, even a 200% increase is only 300 listings. So it's not a lot of listings when you have about 2,000 on the marketplace. Now you look at the number of offers that were accepted, same concept, blue line's the raw data. You can see that we are sliding down a little bit as far as the number, but normally you're on the gold line. So we're above the gold line and we're being consistently above, which is why the red line is consistently above at 120%. Now we're going to look at just the frequency of overbidding. You can see we've definitely been on the downward trend. It's not a huge downward cycle, but we were up here at somewhere around, we were up at, that's 50, 60, we're somewhere around 68%, something of that order, and we're now down at 65%. I'm sorry, we're now down at somewhere around 63%. So we've gone from 63% down to 60%. Now, this is different than the numbers I was tossing out earlier, because the numbers I was tossing out earlier in the conversation were single family homes only in each of the individual micro market areas. This now is Santa Clara, San Mateo, townhouses, condos, single family homes, all blended together, but for only a 1 week period of time. And the first data set is for a 5 week period of time because it's so small. Now you're looking at the frequency of overbidding. This is how often are people doing, and this is each one of the micro market areas. So Santa Clara County, countywide is right here, the red line to make it stand out. You're somewhere around 65% because now you have to, this is 80 up here, so 70 is going to be about here. So that's about 66% of the sellers in single family homes are getting overbid. Now we go back to the macro data. So it's sort of back and forth. The macro data, 100% is right here. This is 101, 102. So we're down at about 102%, 102.5% maybe, actually probably about 102.3%. And you can see back here, we hit just over 103%, maybe 103.2% or something of that order of magnitude. So you can see that the trend is a little bit down. That doesn't worry me. The trend is normally down at this time of the year because, and frankly, days on sold inventory is the leading indicator. And anytime that's below 40, this number isn't going to go crazy, but people are just a little more hesitant. So here's the magnitude in each one of the micro market areas. You can see there's almost looks like a shift upwards, but the last week there's all these little down trends. So the trend had been up. Now it looks like just real recently we've slipped over. This data didn't get updated. I didn't notice that. This is the 14th. We should be out here somewhere around the 21st. I'll have to find out why that didn't get updated. Sorry about that. Here we are on the 21st. This now is looking at each week's data and it's plotting it. So each line is a given week. So the dotted lines down here are the oldest lines. So that's back in basically September. Then the dashed lines are the next set of lines, which is basically the month of October. And then we're in November. So what you can see is we were basically improving with the top of the market, probably just about this gold line, which was just last week. Actually, this is the 30th of October. Last week is this darker orange line right here, and now we're down here. So we were basically improving all the way to October 30th. And then starting on October 30th, you started dropping down a little bit. These are all good numbers though. Basically 55% of the sellers are getting their asking price or more. Only 25% of the well, actually it's back about here. It's only about 30% of the sellers are getting less than their asking price. And so you can see from week to week, these are the most recent weeks. Now it's the same concept, just going further back. And so again, you can see the trend. The dotted lines are the oldest lines down here. So we went from low to dashed lines, which were up. Then the solid lines were above and are coming back down. These outlying areas are the best and worst months. So this is monthly data. Everything else in here is the macro data based on weekly data. So this is 1 week data. This is monthly data just to give us an outer bound. So you never expect to come up here. This is the best month we've ever had, which was April of 2018. This is the best November we ever had, which was November of 2017. And that period of time was doused outrageously on fire, no other way to describe it. And then these are the worst lines. The bottom one is the worst this month ever, which was December of 2001. And this inner one is the worst November ever, which was November of 2001. And they're pretty close together because they're only 1 month apart. This is the macro data, and this is comparing just the macro data for the given year. So now we're, instead of jumping back a week at a time, we're jumping back years so you can get some idea. So the best year we ever had was out here in 2017. The red line is the current year. 2019 pre-pandemic was down here. So we're significantly better than we were just last year, and we're in the middle of a pandemic. And you can see how we're clustered in basically the top end of most of the recent years. Here we go now all the way back to 1997. And again, if you look at this, we're near the top of the group. So there's like, there's this one outlying year, which was 2017, end of basically August of 17 through about May of 18 was just way out on the top. So that line is up here. If you look at just the balance of the years, you're way, way better than a lot of these years down here. You're basically in the top cluster of the best years, and they're solid. So that means they're some of the more recent years, but we're even doing better than some of the recent years. Like, I think this is going to be 2016 down here. I think the gray line is 2018. The orange line is probably 2019. So we're outperforming a lot of the recent years in the middle of the pandemic. So that's the brief summary. I'll do little questions and then we'll go into the detail of it at a slower pace. So if anyone's got a question at this point, go ahead and unmute yourself and ask away. Otherwise, I will continue on. Now we're looking at days of unsold inventory, and we have October the 17th up. Here's the 24th going forward. Here's the 31st coming forward. And what this is just showing is what's happened. Here's the November 7th, and here's the 14th. And I do not have today's data up. But basically, today's data, with some areas are a little bit hotter, some areas are a little bit cooler, pretty much unchanged. I think we were talking about Milpitas being at like 18 days, and I think 18 days down here in South County was probably somewhere in the same ballpark. This is current data, 2021. Here's where you can see each one of the different metrics that's of interest to you. So days of unsold inventory is the most important indicator, in my opinion. So basically, Santa Clara County right now is at 25 days. South County is at 19. Here's the moderate low, which is Milpitas, Blossom Valley is at 15. The moderate area is Campbell's at 21. Cupertino, Sunnyvale at 25. So all the affordable areas, the further commute areas are just absolutely on fire. You move into Saratoga Las Gatos at 44. That sounds slower, but I will point out Saratoga Las Gatos is typically a slower marketplace. So that's actually on fire for Saratoga Las Gatos. And then, so the slowest area relative to their norms is Los Altos and Palo Alto at 45. And remember, I consider 40 to 80 days of unsold inventory to be a balanced marketplace. So that's still a balanced marketplace. And you can look over at some of the other key indicators like the sale price to list price ratio, the percentage of sellers getting over their asking price, the 10 percentile median sold price, and the 90 percentile, so you can quickly see what price range people are getting, that kind of thing. This is going to be San Mateo County single family homes. This is condos and townhouses in both counties. This is getting to be older data now. This is going back to monthly. In October is the last month we have, because I use a 5-week average, 5-week moving period for my month. So it starts on November the 1st and won't end until December the 5th. I won't get the data until December the 6th and report it on the second Saturday. But now you can go back and just say, where were we, October 1st through November 4th? You were at 103.4% of the sale price was what the average seller was getting. The only year that was higher than that, I believe, was 2017. We had a couple close years back here in 2015 and 14 as the market was recovering from the mortgage meltdown. But then you go back in history and the magnitude of overbidding is higher. If you look at the frequency of overbidding, 66% essentially. 17 was higher at 75%. But there isn't a single other October that was up there. So that just gives you an idea of what's happening. And again, this is single family homes, Santa Clara County only. So, not everything is apples and apples. We're now going to go through 5 different slides, A through E, for 11 different metrics and take a look at it. And maybe we aren't, because I'm just noticing this isn't updated either. It's only to the 14th, so it's going to be the same as last week. But basically what it's showing is the unsold inventory in the 22 different micro market areas. It's hard to see, so what we're going to discuss it here. And basically you can see the trend is basically flat. There's no upward pressure where the market's slowing down or anything like that. And this is a week old, unfortunately. This is frequency of overbidding. Again, you can see there might be a little bit of a trend upwards here. And here you can see it a little clearer. Yes, basically San Mateo County, Santa Clara County are both up. The yellow line is condo townhouses. I would probably call that flat. So this is how often sellers are getting more than their asking price. So this is magnitude of overbidding. And again, if anything, the trend appears to be up, except for very recently, it's probably been flat, and that's because we're going into the holidays. So here you can see the upward trend in the single family homes. The condo townhouses has basically been much flatter. And what I would somewhat represent, these numbers are probably leveling off this last week, the data that isn't showing on the slide. This is days on market. So days on market is slightly different. It's a number that the public is more used to having. It's how long does or 50% of the homes on the marketplace before they get an offer accepted. So here you can basically see it's flat. I mean, in Santa Clara County, we're sitting here at 8 days of unsold inventory. We just jumped up to 9. It's really hard to tell the difference between 8 and 9 days, because this could be the highest 8-day and this could be the lowest 9-day. And so there's essentially no difference. Or there could be a difference of almost 2 days, because the median that, looks at a data point. So whatever the day is for that particular listing, and you could be just about to roll over, and you can see that you bounce here up and down a little bit. The one exception, talking about the median, is if there's an even number of data points in your data slide and they're not the same, then the median is the average of those two. So this is actually going to be 8.5 days, because it was an even number of listings. The one just above the fictitious middle point was going to be 9 days. The one just below was going to be 8 days. And so the median is the average. So this is a half data point step. That's why it caught me off guard. Pretty rare to catch that, but so this is 8 days here. So we went from 8 days up to 9 days. You can see that the condo market is a little bit slower, with people on the market somewhere around 14 days. And San Mateo County is slower than Santa Clara County, which is typically not what we have. Now here we can discuss with all the data, because with the micro markets, they segregate nicely based on the size. So you can see how each one of my micro markets is roughly the same size down here. Santa Clara County single family homes is the biggest, followed by the condo townhouse, followed by San Mateo right now. If you go back, you can see that historically San Mateo County single family and condos and townhouses in Santa Clara County were roughly the same number. Now there's been a little bit of a separation. So this is available inventory. How many homes are available? And you basically can see in Santa Clara County, we're pretty flat, but it's not I'm sorry. So there's basically somewhere around 825 homes. So in all of Santa Clara County, with its roughly 2 million people, there's only 825, 830 homes available for people to look at. Meanwhile, in condos, there's 600. So there's almost as many condos as there are single family homes. And this is just off my top of the head as I'm talking. I think there's about 100,000 condos, and I think there's about 340,000 single family homes. So in the marketplace, just the total marketplace, condos are about 1/3 of the marketplace, but here they're making up almost 2/3 of the total inventory. So there's clearly an out of balance right now, which is basically saying the greater percentage of condos are on the marketplace than single family homes. Now, this is looking at the number of offers accepted. There's no drop off. Normally we start dropping off, and I mean, You can see San Mateo County single family homes have dropped off a little bit. That's the kind of thing you'd expect, and I would have expected a little bit higher, bigger drop a little bit sooner. It's just not happening this year. And again, that's because holidays really don't have an impact. You can see this is where shelter in place basically happened. You can see the huge impact with the number of offers that were accepted, and you're going back in 5 weeks. So when shelter in place basically happened, there basically were no offers. So you came down basically 20% each week for 5 weeks. But then by the time we got here, we were able to show vacant properties and it started ramping back up already. Now you're looking at the closed transactions, which is the same as the previous slide. It's just delayed because of the length of the escrow. It also gets spread out a little bit because sometimes you get an escrow that closes in a week, and then other times you have an escrow that takes 6 or 7 or 8 weeks to close. So it spreads out the changes in the marketplace a little bit. This is sold price. This is the 10 percentile. This is what's happening in the lowest marketplace. It's something that most people don't follow, but it gives you an idea of the price range. Because if you look at this being the 10 percentile, the cheapest, and then the 90 percentile, it gives you some idea of what the range of prices are in a given micro market area. But basically, prices aren't going skyrocketing. They're basically flat. This is the median price that we were talking about for each one of the micro market areas, and here they are for the 3 bellwethers, which are Santa Clara County single family homes, San Mateo County single family homes, and condos and townhouses. And basically, they're flat. There's, yes, people are overbidding. Yes, the market is flat, on fire, but overall prices are not climbing. Well, when I say they're not climbing, yeah, they're climbing. It depends on what number you look at. They started the year at 1.2 million, for example, and now you're at 1,430 or something of that order. In San Mateo County, you started at 1.4, and you got up to 1.8, and you're down to 1.7. But if you come back here, if you say that we had the rapid appreciation before the pandemic and we were up here in San Mateo County at something like 1.7, yeah, there's been some fluctuation, but you're basically at 1.7. You look at Santa Clara County, it was at 1.4. Okay, you're at 1.430, but I mean, there's just some fluctuations. Condo townhouses were at $800,000 and now they're at $820,000. So, there's been a slight increase, but not dramatic. The dramatic increases were happening back here before shelter in place. And that isn't because of shelter in place. That's because that's when we normally have the increase in appreciation, the first quarter minus about 2 weeks. So here's the 90 percentile. In San Mateo County, you can see that it gets jaggedy, and it happens because you're talking about only 10% of the listings. You're talking about the high end, so there's more variance from listing to listing, and it bounces around a little bit. So you can see here, the expensive home in Santa Clara County almost got equal to the expensive home in San Mateo County, which is pretty unusual. But you can see there's times when the gap is pretty significant. There's times when it's pretty close together. And then you can see condos and townhouses, even at the expensive end, are pretty flat. And it's just because they're at a lower price. And in general, the condo townhouse market is more stable than the single family home marketplace. Duration of escrow, nothing really significant here. Basically, you can see beforehand we were closing in San Mateo County in 25 days. You're now closing in 30. Everything's pretty much bubbling out at 30 days now. So it takes you 30 days now instead of 25 or 28 days to close an escrow. It's not that big of a deal. And that summarizes it. Since we have a minute, this first line here in the green is the root URL. That will get you back to the YouTube channel where these are archived. If you add the date onto that, you get to the specific session you want. And obviously today's session, it doesn't get posted till about 3 o'clock. If you want the handout and it is not there yet, because I was running late, will be posted at handout 2020-11-21. And for the Zoom meetings, you just do the root URL in green and add in the year 2020. So for next year will be 2021, but not until next year. And then this is my contact information. With that, I'm open up for questions or comments from anybody.
On the page 67, when you talk about a macro, it is these data did not include a condo, right?
Macro data includes single family homes, condos, and townhouses. But let's go.
Oh, really? 67. Look at all this macro data.
This is not macro data. This says micro.
Oh, yeah, micro, yeah.
Micro is single family home. Well, micro, you have to look at the table. Most of it's single family homes. I think it's 9 areas in Santa Clara County, 6 areas in San Mateo County in single family. But then I have 6 condo areas in Santa Clara County and
Okay,
I,
I see, I see.
and so it's
Mhm.
CT means it's condo townhouse. If it's not labeled, then it's single family.
Okay, yeah, now now I know, because, yeah, you do separate them.
I do,
Okay,
right.
yeah.
So normally, see, normally what I'm doing this for is to try to understand what's happening in the marketplace. And there is no combined product. And so this is what I have historically followed, these different micro markets, so you could see what's happening, because not everything's moving in the same direction at the same time. The reason I went to the macro data of Santa Clara, San Mateo, condo, townhouse, single family homes all lumped together in a blender is to try to understand what the overall real estate market is doing. When we went into the pandemic, I think a lot of people, including myself, thought that the real estate market would take a hit. It didn't. It's actually what it's basically doing is people are now needing more space in their home, and they're moving because of that. And I didn't point out to it, but if you look at the monthly chart, the median square footage of the home that's being sold has increased 100 square feet. And that that sort of supports my belief that people are going from a 2-bedroom, 1-bath, 1,000-square-foot home to a 3, 2, 1,500 square foot home, because the component of the homes, the houses haven't grown in square footage. You can't water a house and it grow. So the stockpile is the same, but what's being sold is 100 square feet larger. That indicates to me that the pressures for that bigger house with a less convenient commute. Well,
Yeah.
sorry for being a little discombobulated. I'm trying to migrate to a new computer, and obviously some of the macros didn't update. So I'll figure that out for next week and see everybody next week.
Sure, yeah, I'll see you next week.
Take care.
Yeah,
Bye-bye.
bye.